regarded as junk is no trivial matter, and that is what Namibia has been stuck with for quite some time when it comes to international credit rating agencies. Hello, this is Business 7 and welcome to the program where we will focus tonight on our latest downgrade by Fitch Ratings. Please stay tuned.
Connection. It's in the human touch, the feeling of belonging. It inspires us and empowers us, creates clarity from complexity. It starts new conversations, unlocks the power of advice, and makes an impact on your life. At Alex Forbes, we pioneer insight to provide you with advice that connects your decisions of today to your impact tomorrow.
He's no stranger to the Business 7 studio, and once again we have contacted him to give us more insight into the latest downgrade by Fitch Ratings. Here to tell us more is Robert McGregor. He's the economist at Ceres Capital. Here to tell us more about Fitch downgrading Namibia is Robert McGregor. He's the economist at Ceres Capital. Welcome, Robert.
Hi, and thanks for having me again.
Robert, in a nutshell, just give us a little bit of the history, because Namibia has been downgraded steadily now for a number of years. Can you just summarize that for us, please?
Yes, so what we've seen over the last couple of years is obviously there have been major concerns around the government's ability to maintain a sustainable fiscal trajectory. So basically, these large deficits that we've been running for many, many years, the large amount of debt and the rapid uptake in debt, particularly over the last 10 to 12 years, which hasn't really improved much over the last couple of years. These are all causing concerns. Coupled with in the low growth environment, these have led to concerns on effectively Namibia's ability to repay its debt over the long term. And this has seen both Namibia's ratings agencies, or both agencies that rate Namibia, rather, downgrade Namibia steadily over the last couple of years. We saw Moody's downgraded us to B1, which is effectively in sort of the highly speculative range, so quite well into the junk status, as some people would call it, earlier this year. And then obviously last week we had the Fitch rating downgraded to BB negative, which saw us taken effectively into the non-investment grade. It's sort of the last level on the non-investment grade speculative, just above the highly speculative range.
Robert, in layman's terms, because they use complicated words, and I don't even want to get into the symbols, etc., etc. But in layman's terms, what does the rating at Moody's and Fitch currently mean?
Effectively, it just means that there are more and more concerns about Namibia's ability to pay its debt over the long term, and this is more specifically related to long-term foreign currency debt. So, for instance, Eurobonds and similar. What these ratings mean is obviously the lower the grade, the relatively more expensive it will be for Namibia to issue debt on these markets. We don't foresee this impacting domestic debt issuance really. And maybe to some extent, if we had to look at issuing debt, for instance, on the Johannesburg Stock Exchange, it might impact that a little bit. This is very much more looking at issuing debt on the international market, so like another Eurobond.
I've heard some people say that this is equivalent to a consumer being blacklisted. Would that be the correct thing to say?
Not so much blacklisted. We're still quite far from that. But this is very much a case of saying, all right, well, you're still spending beyond your ability to sort of repay. If we look at Namibia in sort of general terms, deficits, the government is spending more money than it earns. We're effectively issuing debt to help repay debt as well, or to repay interest on debt. And that's obviously not a long-term sustainable measure. And so that's really where these ratings come in to say, well, look, this is obviously an issue. We think that there are certain things that need, but because this situation doesn't look like it's improving and the outlook might be a bit worse, we're saying that if anyone wants to sort of lend you money, they need to take this into say, well, because they're looking slightly less creditworthy again, you might need to make the debt a bit more expensive to justify the risk you're taking on and lending to them.
You talking about expensive debt. Explain that in layman's terms, please.
So effectively, I mean, it's just the interest repayments that we're making on the debt that we issue. I mean, it's similar to any sort of debt, whether it's a mortgage, credit card debt, it's that interest rate that you pay. And obviously, people get better rates, so they effectively have to pay less interest or lower interest charges on the debt that they take up. These credit ratings, so the upgrades would sort of act in a similar way to say you're more creditworthy. The downgrades, especially into the speculative ranges, mean to be more expensive. But as I said earlier, we don't really foresee this impacting the domestic market as much, and the government already does pay quite relative on already.
We lost you there for a moment. Maybe you can just recap that. Isn't government's interest payments, isn't that already very high?
Yes. These investment grade ratings or junk grade ratings tend to affect that. But as mentioned earlier, that's more on the international. Namibia looks, for instance, to issue a Eurobond again, like we did in 2015. We don't foresee it impacting the domestic market much, if at all, really, because Namibia already does tend to issue most of its debt domestically. In the domestic market, most people are already in tune and Fitch take into consideration. There's a bunch of other factors that determine the domestic debt appetite and interest rates as well. But we do see, I mean, the relatively high interest on debt issued in the domestic market. We've actually seen this starting to come down a little bit, but it has been quite high over the last couple of months.
Robert, it has been a government stance to sort of wean Namibia off foreign debt over the past couple of years. Will we be able to maintain that, or what are the chances that we will have to go and borrow foreign money again?
Well, it's very much down to your economics 101 of demand and supply. So government is obviously supplying debt in the local market. The question is effectively how much demand is there. What we've seen obviously is that the largest sort of player in the government domestic debt market would be the pension funds. And that's partly or largely impacted by the Regulation 13 control. So basically how much of their assets they need to allocate to Namibia. That's driven a lot of the demand over the last couple of years. What we've seen, and something that we already raised concerns about previously last year and before, was that the pension funds were already quite highly allocated to Namibia. We've seen the NAMFISA data from last year, which already showed that from Q2 last year, so from June last year, the pension funds had more than 45% of their assets in Namibia. We saw by the end of last year just under 50%. And that really raised concerns for us as to where further demand was going to come from in the domestic market. I think long term, this is still a bit of an issue, especially looking at how much debt we still need to issue over the next couple of years, the large deficits we're running, as well as the large overall financing requirements that government has. And that means that to sort of ease the burden on the domestic, we will need to look elsewhere. How they do that, there's various options at play. I mean, we saw in the Minister of Finance's budget speech, they sort of made talk, and in the budget from earlier this year, we saw, mention of maybe looking at the JSE again. We still have a debt program. And then around 2025, when the second Eurobond falls due, to fully repay that, the impact that has, that there isn't sufficient hard current impact on cash flow and trying to offset that with domestic debt issuances is a bit of a concern. So we'll more likely then need to look at somehow offsetting that, maybe by rolling that Eurobond, if not fully, then at least when it falls due. That's obviously then where these credit ratings have quite a large impact.
While Namibia and its cities are seen as one of the cleanest countries in Africa, plastic pollution is a big problem. Therefore, it's up to each of us to do what we can to reduce the use of plastic, especially single-use plastic bags. At Liberty Life Namibia, we've taken the decision to turn all our old branding items into reusable shopping bags. It's a way in which we can drive sustainability and look after our most important stakeholder, our environment. If you also believe in sustainability and would like more information, please get in touch. Liberty Life Namibia. In it with you.
We thought the worst was behind us and that 2022 would be the beginning of a new era of growth. However, we didn't, of course, know that Russia would invade Ukraine and all the consequences that came with that. We asked Robert McGregor, the economist at Ceres Capital, what the impact of this could be on Namibia.
Robert, I think we all thought and certainly hoped that the brunt of economic hardship was over in 2022, and then Russia invaded the Ukraine and we saw the oil price causing havoc. In light of that, what is the outlook for Namibia's economic growth this year? Also, I see internationally, a lot of economists are speculating about recessions coming back. Do you think that is an option for Namibia?
Well, we see the ratings actions taken now, especially this recent Fitch one, as actually being a bit behind the curve. We were very, very concerned about government's fiscal sustainability over the last, and I think a lot of the ratings agencies took a soft approach because of most of the globe. But in our view, things are actually looking up. That's why, you know, the ratings aid in their action. In our view, we think the prospects are looking better. You know, not to say that everything is sort of suddenly fixed, but that over the medium to longer term, we are seeing more positive things. We are seeing sort of growth. We're expecting growth over the medium term, even if it is slow growth. We are expecting improvements in government's revenue as well. In fact, we think that some of government's revenue forecasts, particularly conservative for the next couple of years. And so we do think that there are some specks of light. I don't know, maybe falling that easily into recession, given the incredibly low base we're coming off of already. And so while recessions globally, we don't foresee that as significant a risk here, particularly given where we led, for instance, in the mining sector, the primary industries, and then the slow rebound from the rest of the economy, given that we no longer have things like lockdowns impacting us. There is obviously the concern around inflation that is largely out of our control at this point. It's largely global global commodity prices driving that. And so we're effectively a price taker. You know, Namibia's inflation is actually relatively moderate compared, especially in developed economies. And obviously, we're starting to see that these recessionary fears are starting to cause pullbacks in some prices, particularly around soft commodities and metal. Point to an easing of inflation short term, but definitely, you know, sort of in the next 6 to 12 months at the least.
Robert, it's not very often that I'm able to end a conversation with you on a positive note, so I think I'm going to call it quits. Thank you very much for your insights as always, and give our regards to everybody at Cirrus.
Thanks for having me again.
People are very often confused about what exactly inflation is. Well, the International Monetary Fund used one of their economists to explain it in a layman's terms, and we're going to play out with this video. Thank you very much for joining us in the Business 7 studio, and we will see you in a week's time. Until then, goodbye.
Hi, I'm Sandila from the IMF, and throughout this series, I'm going to be answering your questions about thorny economic issues, breaking them down, and giving you straight answers without all that fancy academic speak. Let's get started. There's been a lot of talk about inflation around the world, but what is it really, and why is it happening? So, what is inflation? Inflation is a broad-based increase in the price of things. First, when I say broad-based, I really mean that. Inflation is not about the price of broccoli going up versus spinach, because there's been some new diet fad that says that broccoli is better for you. It's about the prices of vegetables rising in general, and about the prices of other things rising. Now, for consumers like you and me, it's about a broad-based increase in the prices of things that we consume and pay for. So that includes things like groceries, gas, subway passes. For businesses, it's about a broad-based increase in the prices of things that they pay for. So that includes the computers that we work with or the electricity bill for the lights in this cafeteria. There's a second related point, which is that it's about the representative basket of things that consumers actually consume, on average across the entire population. So maybe subway pass prices are going up, but that's not going to factor into countrywide inflation in a major way unless most people in the country actually ride the subway. Now, the reason that we care about inflation is that it can lower people's living standards. When prices rise faster than wages, people are effectively getting poorer. $1 that I have today is worth less than the $1 that I had last year. That makes me worse off. That's why we say that inflation is the worst tax on the poor. So, why is it happening? Well, there's two big buckets of reasons. The first is when there's shortages in supply or slowdowns in supply. So let's think about coffee production since we're here in this cafe. Let's say that there's a bad harvest or a drought, which reduces the amount of coffee beans. However, everyone in the world, including myself, is still going to have the same demand for those coffee beans, and that's going to nudge prices up. Or take COVID as an example. A lot of people were asked to stay home to avoid spreading the virus. In some cases, that led to a shutdown in ports or shipping terminals, limiting supplies. Again, that nudged up prices. The other big bucket is on the demand side, so people demanding or wanting more goods and services than there are available. Sometimes economists call this an economy overheating or running hot. So what can governments do to ease it? Well, first, it depends on the source of inflation. But the broad idea is that governments want to bring down price increases to a manageable and stable level, both for businesses and consumers. Let's start with the demand side. So governments, through their central banks, can decrease demand by increasing interest rates. So whether you're buying a house and taking out a loan to do so, or if you're charging things to your credit card, higher interest rates mean higher borrowing costs. And so those costs are going to go up, and that means less money to spend on other things. However, it also incentivizes saving. So a lot of savings accounts give you small interest payments when you put your money in the bank. Those interest payments are also going to go up. Now, on the other side, governments can also cut spending or increase taxes, and the broad idea is that there's less money sloshing around to spend things on. Now let's think about the supply side. It's a little bit trickier, but governments can still do something. In some cases, governments might have special reserves to lessen the damage. Think strategic oil reserves. But not all countries have these, or they're not large enough to have an impact. The second thing governments can do in the longer term is create an environment that incentivizes businesses to produce more. So let's think about a competitive environment. So you want to avoid situations where you have just one or a few firms setting prices in one industry. So, for example, let's say that we live in a small town and there's just one pizza place. That one pizza place could charge us whatever they wanted to get those pizzas. Now, consider competing pizza places coming in. That firm is probably going to reduce its prices in order to keep its customers. Now, stepping back, in reality, sometimes we both have too much demand and too little supply. So it's a balancing act, and governments often use a mix of policies to help tame inflation. So with that said, I'm going to buy some lunch to tame my appetite. Please be sure to send all of your questions to askaneconomist@imf.org. I'll see you next time.
Connection. It's in the human touch, the feeling of belonging. It inspires us and empowers us, creates clarity from complexity. It starts new conversations, unlocks the power of advice, and makes an impact on your life. At Alex Forbes, we pioneer insight to provide you with advice that connects your decisions of today to your impact tomorrow.
While Namibia and its cities are seen as one of the cleanest countries in Africa, plastic pollution is a big problem. Therefore, it's up to each of us to do what we can to reduce the use of plastic, especially single-use plastic bags. At Liberty Life Namibia, we've taken the decision to turn all our old branding items into reusable shopping bags. It's a way in which we can drive sustainability and look after our most important stakeholder, our environment. If you also believe in sustainability and would like more information, please get in touch. Liberty Life Namibia. In it with you.
Ladies and gentlemen.
Yeah, welcome to another exciting edition